Hello everyone and welcome to the first POCA Q&A Tricky POCAs session hosted by myself. And my name's Andy Evans. I'm also co-hosting with Rob Miller. He is a forensic accountant working at Inquesta. I'm a barrister working at 18 St John Street Chambers in Manchester. Rob works across the country. I work across the Northwest, but with the advent of COVID-19 and the cloud video platform increasingly across the country, dealing with difficult POCAs. I've dealt with these for about 10 years, ever since about 2009 when it became possible to get counsel to do POCAs. And I was very much chucked into the breach, and it's rather stuck since then. The plan with these sessions is that we're going to have 4 different sessions. Today's is on tainted gifts. Bear with us a little bit. We're testing a new platform, which is Microsoft Teams Live Events. The plan will be, as you can see on the screen, that you can interact with us via the chat box, and we'll seek to answer any questions we can. But as we go through, we've got a few slides to show you. And at the end, we'll come up with a question and answer session kicked off by ourselves, but do feel free to interact with us. The session should last about half an hour, but if we can see you later on, and we'll be able to stay on the call for 15-20 minutes afterwards. If that's me, I'd like to introduce my co-presenter, Rob Miller.
Good afternoon and welcome to this session. As Andy said, I'm Rob Miller from Inquesta. I'm a forensic accountant. I specialise in assisting criminal defence cases. I'm here to hopefully try and add a different dimension to the standard legal arguments. So I'll now pass you back to Andy.
Thanks, Rob. So as you'll see, our Q&A session is on Microsoft Live Teams Events. It's a live event. You will be able to view slides and presenters, but you will not appear on screen or be heard. On your screen, there is a Q&A button at the far right-hand side. Please open that to interact with our producer, Stuart, who will pass questions on to us either during the session or towards the end. This is a closed chat and can't be seen by other attendees until the questions are passed to the floor. The slides will be made available on request to Chambers. We hope you find this session useful. Please let us know via the chat box, and feel free to come along to our next 3 sessions, Thursdays at 4:30, where we'll be dealing with hidden assets, Section 22 reopenings, and the position where a lifestyle benefit figure is reopened on the basis of historic expenditure. I'm going to move on now to the beginning of our content. What is a tainted gift? A tainted gift fits in when determining the recoverable amount. It's dealt with when setting the available amount in any case. It is added into the calculation of available amount as per section 9(1)(b), but it is defined itself at POCA section 77. It is defined as any transfer for consideration whose value is significantly less than the value of the property at the time of the transfer. So, a transfer for less than good consideration. What's the time period? How far back can they go with one of these? Well, it depends whether it's a lifestyle case or a non-lifestyle case. Now, lifestyle cases and non-lifestyle cases might be a matter for another seminar, but put simply, your lifestyle cases are ones that are on the schedule at the end of POCA, or ones that continue over a particular length of time. And lifestyle is a consideration made when setting the benefit figure. Where it is a lifestyle case, and that's already been determined, the tainted gift window is any time made after the relevant date, which is 6 years prior to charge, or any tainted gift or any gift made at any time but obtained as a result of or in connection with what's termed general criminal conduct, or a variant of the above, anything representing directly or indirectly, in whole or in part, in the defendant's hands, that which would fall under section 3A above. Really, it's anything that's within the 6-year period, or before that, anything that's directly linked to general criminal conduct. In a non-lifestyle offence, it is any transfer made at any time after the earliest convicted offence was committed. That's how you define them, and that's the time frame. How do you value one of these? Well, it begins with this rather strange piece of fractions, if anyone remembers their primary school mathematics. Section 77 78.2 defines it as the fraction whose numerator is the difference between the two values mentioned in subsection 1 and whose denominator is the value of the property at the time of the transfer. What does that mean? Well, really, the gift is the proportion of the value of the property gifted at the time it was gifted. It is the reduction that was passed over at the point it was passed. I've done a quick description of this. So this is section 72A and B, worked example here. If there is a car worth £100,000 and it is passed on by the defendant to his daughter for £20,000, we can all see very quickly that the difference is £80,000. If the value at the time of the transfer was £100,000, you can quickly see that £80,000 divided by £100,000 is 0.8. So the defendant's gift is 80% of the asset. It's a very long way round of saying he is deemed to have available to him the amount of the devaluation. So is it as simple as that? Does it say as the amount of the devaluation at the point it was gifted up to 6 years ago, or maybe even further? Well, no, there's a second step to valuing a tainted gift, and it's here. Section 81. Section 81 shows, and as always, POCA helps the Crown in this, it's the value of the gift at the time, uplifted via the retail price index, or if higher, it's the value of the property if still held by the recipient. So say in our example, the daughter still owned the car, it would presumably have gone up in, well, not a car, but a house will have gone up in value. Or if the recipient has sold all or part of it, then it's the value plus part of anything held by the recipient, which directly or indirectly represents it. You can essentially trace into different accounts. But of course, the main feature here is it's the greater of. It's whichever is highest. That's the statute. That's what a tainted gift is. What can the case law tell us? Well, how do we define consideration which is significantly less than the value at the time of the transfer? That's a nice woolly phrase, which any of the lawyers on this link will very quickly realize is something that can be attacked. Expert valuation is key here. If you are able to lower the value of the gift or the property in the first place, you can of course lower the value of the reduction. Where a case in which the Crown incorrectly valued the asset, or in fact what they did, they valued the incorrect asset altogether. They valued the legal interest in the property rather than the equitable interest, is Richards. And it's a good example of where if the Crown had misunderstood what it was gifted or misvalued it, if you can say, actually, I gave it away for proper consideration or the correct amount, it's not a gift. If I give something to someone for £20,000 and it's only actually worth £20,000, it's not a gift. What if I give something to someone for £20,000 when it was worth 80, but they already owed me 60, or they gave me something else? Relevant consideration. The consideration need not be monetary. It could encompass taking on full parental responsibility whilst a partner works. Hayes is a case I think we might come back to over the course of this short seminar, but it's a very useful example of where one partner is working and is fulfilling all the household duties, including raising a child and rebuilding a house, whilst the other partner pays the mortgage and pays the bills and pays directly to her. And what they said was this: the wife's actions were good consideration. She'd done her bit, and therefore she was owed money back. On the facts in Hayes, the appellant lost because of the way in which money had transferred. Essentially, the Court of Appeal found that the amount of money that she'd taken out of the relationship for other reasons and in other ways completely offset the tainted gift. Essentially, she'd already been paid off. But Hayes sets out exactly how to approach this, and it's something I'd like to return to in a little while. What about a loan? What about a loan where they simply, I received this gift, but it was only a loan and I was going to pay it back? Well, in Kraft, they said yes, it could be a loan, but only where it made commercial sense. In Kraft, the loan was secured upon something that was completely unactionable, and it made no sense at all to make the loan. It was basically cover for a gift. So some cases there to consider what is relevant consideration and what does significantly less mean. Now, at this point, I'd like to hand over to Rob Miller, who's going to discuss a couple of cases that he's dealt with in relation to how a forensic accountant can help you deal with tainted gifts. Rob.
Thanks, Andy. Very interesting. So I just wanted to bring a little bit of something different to the seminar and talk a bit more about strategies that people can use when negotiating settlements where tainted gifts are involved. Now, we know they are, the first thing to say is that I know that there may be some prosecutors in the room, but just to be very clear, I'm coming at this very much from a defence point of view. We know that POCAs with tainted gifts are very difficult to defend against, but just because there are tainted gifts doesn't mean that the writing's on the wall. I'm not saying that every argument will be successful, but there are arguments that are not necessarily in accordance with the letter of the law, which are worth running with a view to negotiating a settlement. After all, we know 97% of POCAs don't go to a contested hearing, so really everything is to play for. For example, by letter of law, it doesn't matter, A, whether the tainted gift is available to the defendant. It doesn't matter where the money came from to pay the tainted gift, or indeed what the tainted gifts have been used for. However, with a bit of detailed analysis, I've seen these arguments used successfully in negotiations. The most difficult part of any POCA, as you'll all know, is managing the defendant's expectations. I've rarely seen a POCA case with a significant tainted gifts figure that's ended up with a zero confiscation, and therefore the likelihood is that in any negotiated settlement the defendant will have something to pay. Now, the starting point is always to reduce the benefit. As you always know, the lower the benefit, the lower the likely available amount. However, the law isn't always helpful when it comes to negotiation, and we need to remember that based on my experience and indeed speaking to some of the FIs that I've dealt with, they generally don't want it to go to a contested hearing or to give evidence in court. Often their objective is not for the person to serve the default sentence, but it's to recover the monies. So this case that's on the screen here is quite a useful one, and one of the points I wanted to get across is that it's, in my view, important to distinguish between the people that have genuinely hidden their ill-gotten gains and those that have actually used the money to live on. So in the latter case, the money won't be available. So, and it's also worth looking at what was the intention of giving the money away. Was it to avoid a POCA, or has it genuinely been given in the ordinary course of life? So this is a case where it was an income tax and VAT evasion. The first section 16 identified a particular benefit of £462,000. But they didn't put any available amount in at that time. Unfortunately, the judge said he must have buckets of money somewhere. So as a result, the Crown didn't accept that he didn't have hidden assets, and they believed that he had a significant amount of cash that had been removed from the business. So I was instructed, I did a significant amount of analysis on the bank accounts. Unfortunately, fortunately, I didn't find hidden assets as such, but I did find that he had transferred £280,000 to his wife, which caused a significant problem. Now, the question here is, it's undoubtedly, it's without doubt he had transferred that money to his wife. The question is that a tainted gift? And by the letter of the law, yes, it was. But as I say, it doesn't matter whether it's available or not, but I believe it's still worth looking at where the money has gone, because I have seen these arguments run successfully. So if the money has gone to the wife and all the bills have been paid, the money is no longer available. Ultimately, in this case, we also looked at whether the defendant had the ability to raise the funds to pay the tainted gifts, which he didn't. Can I have the next slide, please, Andy? Okay, so this is another interesting case that we've recently dealt with. Benefit of 3.4 million and an available amount where the majority of it was tainted gifts. Now, upon further analysis of this, we realised that actually many of the assets that had been bought from the tainted gifts, or many of the where the money had gone to, it turned out it had been taken by the insolvency practitioner in insolvency proceedings. So the question arises, by the letter of the law, that would be a tainted gift because the money has been used it was given to somebody to put into a house. But actually, it's double counting, really, because the money's been used. It's gone. It's been given for a legitimate reason to the insolvency practitioner. Okay. So the questions really, where a tainted gift is involved are, and these are, I'm not saying these strategies are guaranteed success, give guaranteed success, but I do believe that they're always worth running when there's a tainted gift. And they are, firstly, look at the funds flow to see where the money has gone to. Look at what the money has been spent on, because I have seen cases also where the money's been spent on lavish expenditure outside the normal ordinary course of living, and the prosecution will not accept that that's no longer available. It's always worth examining the source of the tainted gift, and again, not necessarily relevant legally, but it could be an argument if the money has come from a legitimate source. And the other option is to consider whether the defendant has the ability to raise the funds to pay the tainted gifts. Andy, over to you.
Thanks, Rob. I think some of the points that I've seen in the way Rob's approached this are absolutely crucial. The first is this: even though the law suggests that if the tainted gift cannot be realised, it doesn't matter, we all know that 97% of POCAs resolve by negotiation. We all know that the Crown are not going to be interested in having as an available amount something which simply will never be realised. Not from any part of feeling sorry for the respondent or any of their relatives who are about to be stripped of an asset, but simply because POCA is not about sending people to jail. It's about stripping them of their assets and, with a happy secondary effect, taking money to the Crown. It's about moving money around, and if that money is simply never going to be recoverable, and if a forensic accountant has proved that it is long gone, then what is the tactical advantage to the prosecutor for taking it? You can also see now the idea of real consideration. What if it wasn't worth that much money in the first place? Well, that's something that can be easily shown by a transfer of funds analysis. Ask yourself, is it truly a gift? Is it truly dissipated? And finally, was it actually the respondent's intention to hide it in the first place? The lavish expenditure cases that Rob mentions are absolutely plain. If the money went into a boat, which belongs to your client's 3-year-old daughter, chances are that's a classic tainted gift. But there are a million shades of grey from there down to the money went into the family's Waitrose shopping for a few weeks, even though that could be something passed on for no consideration and would constitute a tainted gift. We suggest analysing which way the funds have gone. Consider the prospects of being able to repay. And we suggest this not in terms of legal submissions to a judge, but in terms of a negotiational tactic. Consider where the money can come from. Consider double counting. There's a case there called Morrison. I'm going to come to how we got to Morrison in a moment. But in Morrison, they considered the position if there was simply no prospect of repaying the tainted gift. There may be some prospects of success. For the purposes of settlement, if he has no means of paying the tainted gift, is it in the court's interest to apply a default sentence? That's a consideration that is actually fully within the case law and goes in the respondent's favour. Is it, wire, proportionate to impose an order where it's simply not possible to repay? Would it create a risk of serious injustice within the language of the Act? All of these are points which can be brought to bear at the negotiation stage for those 97% of POCAs that never see a judge, if only to rubber stamp it. Does the financial investigator really want to take this to a contested hearing? The vast majority of the FIs that I meet and that Rob meets don't. There's no guarantee of success, but consider all of this. Also consider on the other side, managing your client's expectations. Remind them that once tainted gifts are on there, it's very difficult to shake them off, but what you can achieve is reducing the value. So I've mentioned how the law is against you. Here is why. Kim Smith was the first case in which somebody took to the Court of Appeal wire proportionality in the case of an unrecoverable tainted gift. How could an order to repay or to make available a tainted gift which had been passed on some time ago and dissipated possibly be proportionate? And the response by Mr. Justice Keith was that the whole point of including assets like this is essentially to prevent him from dissipating his assets by giving them away. Essentially, we have tainted gifts to prevent bad people from hiding them. We must not incentivize that sort of conduct. If he's able to say that they are of no value because he can't get them back, that would defeat what the inclusion of tainted gifts was seeking to achieve. That was then reapplied in the case of Johnson. In a paragraph just after he cites Smith and the judgment in Smith as exactly the right approach, Mr. Justice Edis reminded us all that the statutory policy is to apply pressure to those who have dissipated or more usually laundered their assets during a period when they were benefiting from crime. Pausing there, the logic is the same logic we always see. There's a balance in POCA between being proportionate and just and achieving the statutory aim of POCA, which is to strip criminals of their ill-gotten gains. But look at the language there. Money laundering, periods when they're benefiting from crime, stripping assets. There's a world of difference between that and somebody paying for the Waitrose shop on the weekend. This is looking at individual assets. Whilst all these decisions go against the appellant or the respondent to the original order, this all begins a discourse whereby there is relevance to unrecoverable assets. Moving on to, well, one of the interesting features of Johnson, however, was the first appearance of the fact that when Johnson lost the appeal, the time in default was not altered. Linda Box, the judge, decided to conduct tracing, to knock out of the confiscation order anything that was unrecoverable. The Court of Appeal said that was the wrong approach and put her available amount back up by thousands, tens of thousands of pounds, but declined to do anything on the time in default. I've put the paragraph number there. It's the last paragraph of the judgment. Although we don't agree with the approach taken and we must increase the available amount, we do nothing with the time in default. And there's Morrison again, a decision of Manchester Crown Court. Mr. Recorder Bromley Davenport, Queen's Counsel, for those of you that have met him. Paragraph 99, the last paragraph, having spent 98 paragraphs of explaining that the approach of the recorder was wrong and that unrecoverability of tainted gifts in this case was irrelevant and it had to go back on the available amount, did absolutely nothing to increase the time in default. There is now an argument that time in default should not increase along with available amount where it is an unrecoverable tainted gift. There is an awful lot of dicta in there that can assist you, like every case where the facts aren't right. Someday someone will make this work. Wire had to come from somewhere. But if the least you take from it is that these cases establish that where you've got an unrecoverable tainted gift, you don't go to prison for it, that's probably still quite a good thing for your client. Rob, I'm going to pose you a question because what we wanted to end with was some question and answers. What we plan to do here is bounce these questions back and forth between us, but if there are any questions you'd like to pose in the Q&A box, now is the time. But first of all, Rob, I'd like to pose you the question. If a tainted gift was used for a property which was subsequently recovered by an insolvency practitioner, can it still be included as a tainted gift?
Well, Andy, I think this was a question for you actually, but anyway, my view is it shouldn't be. Again, from an accounting and a commercial point of view, the fact is that money is no longer available. That asset is no longer available. It would be impossible for the defendant to get hold of that asset again, and it would be entirely disproportionate to confiscate it, given that it's gone to a professional body, I suppose, if you want to call it that, as a result of an insolvency process. And what's your view?
Well, Rob, my view is that by the letter of the law on the application of Morrison and Box, it could be theoretically included as a tainted gift, but there's absolutely no tactical advantage to the Crown in doing so, and that it is likely to form a very, very substantial piece of negotiation artillery when brought to bear. You can just imagine the state of the Section 17 when appended to an excellently formed forensic accountant's report. It's explained that this asset has not only long gone, it's not been laundered, it's not been squirreled away to prevent criminal gains, it's been passed back to, it's possibly even the victims of the offence. It's precisely the sort of thing that I was mentioning before when we were talking about putting things into negotiation, which potentially may not assist us in court. Our next question is, if money has been spent and is no longer available, should it be included as a tainted gift? And I think I'll start with this one. The question really is, where is it? The question is it been spent on a boat or a Ferrari? Is it still sitting in a bank account? Or where has it, or has it been dissipated away to pay for other things? Is it simply completely unrecoverable for normal means? And where I need help on that as counsel, is with the assistance of a forensic accountant in tracing the money. Well, what's your thought on number 2?
Well, again, it's a similar situation to the insolvency practitioner, really. You know, if the money's not there, how can they get it? And not only is it not there for them to get it off the individual that they've paid it to, they also don't have any availability or any ability to borrow that money, because ultimately any assets they have had will be included in the available amount. So what can they borrow on? And therefore it seems disproportionate and I would argue serious risk of injustice if they were to include that in the section, include that in the confiscation, and indeed for the defendant to serve the default sentence. That would be my view. So Andy, then, so if the money has all gone to the wife and it's all been used to meet household expenditure, which, you know, obviously had they not had the criminal money, they wouldn't be able to afford to pay those household expenses. But ultimately, it's still gone, and it's been used for a genuine purpose. I mean, would that be included?
This is where they failed in Hayes. Hayes sets out that if it's gone for a genuine purpose, and if it is a situation like this where it's a spouse, then it is not a gift. Guys, I'm realizing we're getting questions through. I've got 3. I'm going to raise them as we move along, and I'll publish them, but I'll deal with finishing this one first. In Hayes, the Court of Appeal directs us in a beautiful judgment with step-by-step instructions to place a value upon the property transferred at the time of transfer. Now, at the time is important, and that's where an expert valuer or a forensic accountant could fit in. Assess whether consideration has been provided by the recipient of the property, and if it has, what was the value. So they open the door to an assessment of consideration in terms of pounds and pence or percentage. Again, very, very useful, because you can begin to shift the value of that tainted gift. Why not accepting all of it? And then assess whether the value is, quote unquote, significantly less than the value of the property transferred. What was the value of the consideration? If there is a significant difference, then it's a tainted gift. They opened the door to consideration which was not in the form of a direct financial contribution. A direct quote from Hayes. So it needn't be direct financial contributions. So that then begins a whole new area of consideration. What is a spouse's non-direct financial contribution? And we all remember the cases from law school about what a wife or a spouse does in a household that does not constitute a direct financial contribution. But also it opens up this. What about mates' rates? What about an eye for an eye and helping out? What about you scratch my back and I scratch yours? Aren't there a myriad different reasons in certain circumstances where there might be non-direct financial contributions which would constitute some consideration? So when you're looking at a spouse, I'd absolutely say, when you don't just consider the unavailability, consider whether it's consideration and a gift in the first place. I'm going to turn to the first of our questions. I think if I publish it here, and then
shall I take the first one?
Yeah.
Yeah.
So hopefully you'll be able to see it. But Rob, if you want to read it through.
Yeah, sure. Okay, so this is from Kieran. It says, when the court looks at uplifting value of properties, is there any indication that they are taking very recent events into account? We have a lot of clients saying their gifts on property are not worth what they were when their POCA proceedings began, or when they made the gift, as the housing market is now uncertain due to COVID-19. Now, I assume this relates to the CPI uplift in the value, and you know, the CPI is what it is. It's likely, and it has already gone down, I believe, and it's likely it's going to go down further. So in terms of increasing the value or changing the value, I think it's a wait and see approach, and if we can delay it for a bit longer until the CPI is next published, then we'll definitely know more then. And are you in agreement with that?
I am entirely. We've never really seen anything like CV19, although on that generally, I recall the property crash of 2008, where as soon as you applied a value to a property, it had plunged by 2 or 3% within a week. The court's bin became rapidly filled with Section 23 applications, and that was really the only way to deal with it. It was a little bit like one of those sort of property crashes you used to see in history, either in Zimbabwe or Germany, where people would be moving around with wheelbarrows full of money. There was no way of attaching a solid value to an asset. Sometimes the only way to do it is to take the value at that moment, the best you can do, and then seek to revalue it downwards as time goes on. So the useful tool there in the Section 23 revaluation of available amount by defence.
I think there's another point there as well, though. Is it even right to apply the CPI or RPI or whatever it is to a property when you can actually get the value of the property at the date of the confiscation?
I think we're in unprecedented times whereby the use of the CPI is we all know now, because of the nature of the economy as we're going to be in the next 6 to 12 to however many months, it is going to be very different. And is there an argument that tool is no longer appropriate? There must be. Is there an argument that it's unjust or disproportionate to apply that tool? Potentially. I'd recommend doing that. Yeah. I hope that answers Kieran's question. I'm going to move to the next one. This is from Anonymous. It says, can a tainted gift be used as evidence of a criminal lifestyle? A tainted gift shows a certain amount of money moving around, I would suppose, but evidence of criminal lifestyle, what you're really looking for is either a scheduled offence or offending over a certain period of time. What can be used as an evidence of criminal lifestyle is a large amount of money moving hands in the right sort of offence, if you're looking at a money laundering offence. So in that context, I think it would. But usually tainted gift is, as a theory at least, something I would always try and divorce. What I try and tell everyone at a POCA seminar is always try and divorce benefit figure and available amount in your mind as best you can, even though they may both appear in different columns. So the answer is theoretically yes, but down that way madness lies if you start trying to consider the two things at once. Rob, any thoughts on that?
No, I think you've covered that one.
Our next question is from Shahid at Middleweeks. It says, lifestyle case. Father gives a watch £2,000 to a daughter 10 years ago. She wears it daily. Is it still a tainted gift or a serious risk of injustice? He's given it to her. It's obviously a gift. The problem is, yes, this raises an interesting theory. It's a gift because presumably she's his daughter and he can claim it was her birthday. But the tainted gift conditions do come in. She wears it daily, yes, but there's nothing in the Act that says you can't strip from the recipient of a tainted gift that which they have used. In fact, the dicta in the case law says that's precisely what it's for. Injustice to a third party isn't really anything we are considering. I'd say that's a classic example of a negotiation point, but I wouldn't want to take it to a judge. The only thing I would seek to do, sorry, Rob, the only thing I would seek to do is try to revalue both. Is there a good argument that the watch is no longer worth £2,000, has in fact dropped in value, or perhaps wasn't worth £2,000 in the first place? General approach. Rob, any thoughts?
I think this also brings an interesting point over timescales. I mean, I don't know if it was 10 years prior to the committing the crime, or whether it's 10 years prior to confiscation, but either which way, it's certainly before the relevant date, which I know by the letter of the law doesn't matter if you've got a general criminal lifestyle. But I think from a negotiation perspective, it's worth looking at how that watch was purchased, what was the source of the funds, and B, I think there potentially is a serious risk of injustice if she's had it for 10 years, which was arguably prior to the crimes being committed.
Yes, I'd agree with that. I didn't deal with timescale, but yes, it's certainly if you're looking to prior to the crime being committed, that's not only a brilliant argument in negotiation, it's one that a judge is going to be very interested in. Right, we've got one further question again from Anonymous. I shall publish that, and it reads, where the household expenses include mortgage payments on the property, what is the status of the gift then? Well, Anonymous, I'd say have a good look at the case of Hayes. Look carefully at what the people living in the property did for the return of those mortgage payments. In terms of in fact, in Hayes, I believe, can't quite remember the fact, I believe it was to do with that's how they were seeking to gain the asset back. It was the property itself. So the status of the gift is simply lapsed in the property, but what you have to do is analyse what was the situation vis-a-vis consideration when it was passed across. Bearing in mind, tainted gifts doesn't really mind or care where the asset is. It's simply, oh, we can attach this to a property. It's now in the form of a mortgage payment. You'll recall the slide where we looked at what can constitute a tainted gift, and therefore we can go for it. The response must be, yes, it's there, but consider whether consideration was given for it. Rob, it's a two-part question, so I'm going to allow you to come back in on the first part.
Well, all I was going to say was, you know, it depends. This question only talks about the property, and that depends. Is the property in the defendant's name, or assuming that the property has been gifted to somebody? If it's in the defendant's name, then there's an issue of a double counting, because assuming the mortgage has been paid by the wife because the money's been transferred to her, but the property's in his name, it would be included in his available amount, and therefore, as would any capital that's being paid off against the loan, and therefore any equity. So there's a double counting issue that would definitely need looking at as well.
I agree, yes.
So the next part is what about the imputed knowledge of the source of the monies? Does that taint the gift, notwithstanding it is for genuine spousal duties or simply providing an alternative pathway of recovery as against the spouse? I don't, I mean, this is for you really, but I don't know whether imputed knowledge makes any difference from a law point of view. Ultimately, if it's a tainted gift, it's a tainted gift.
I entirely agree. If you think back to the dicta and the case law I showed everyone, it's if a recipient of a tainted gift was to be able to say, I had no idea where it had come from, then that would frustrate the policy of tainted gifts and the policy of POCA. It's not a bar to it. This is a very strong piece of legislation. So any imputed knowledge or otherwise doesn't matter. In fact, knowledge that it was, or intention to pass on a tainted gift by the respondent to the POCA doesn't really matter. All it is, was it a transfer for an undervalue to a third party during whichever time period is applicable? And that is really what applies before you start looking at injustice and start looking at any of the other points we've raised today. That brings us to the end of our questions. It brings us to 5:10, which is some quite effective timing, given it's our first time through. I do hope everyone's enjoyed this. I hope it's been useful. Do give us some feedback via the chat box. We have some quite important feedback by your friend and mine, Richard Chapman, Queen's Counsel. Richard's our head of chambers here at 18 St John Street. It was his idea to try and get myself and Rob together to do this. And he simply said, and it has to be from me because we can't get him directly on the call because of the technology. Thank you to Rob and Andy, extremely informative and interesting in equal measure. So thank you, Richard. And thank you also to Stuart for producing and making it all go so smoothly. I pass on those thanks. And secondly, from Richard, to all of you watching, thank you for attending. He would normally be inviting you to stay and share a drink with us, but it's a bit tricky to do virtually, although we will take any suggestions. Finally, we look forward to seeing you on the 18th of June, where Rob and Andy will talk about hidden assets. I second that. And I assume that's how to establish the assets were never there, rather than how to continue hiding them. Yeah, that's a different book, Richard. Thank you. Have a good evening from Richard Chapman and keep well. It's have a good evening from me as well. And it's hopefully have a good evening from Rob Miller.
Yeah, I was just to add one final thing. Again, I just want to thank Andy and Stuart, and also just to say that if there are questions that haven't gone on the Q&A live, please feel free to either contact myself or Andy, and we will do our best to answer them. Thank you very much,
everybody. Hopefully see you next week or one of our future seminars. Just to remind you, next week is hidden assets. The week after is Section 22 reopenings. And the week after that is historic transfers forming part of a benefit figure under the lifestyle provisions. Thank you very much. Goodbye.
Goodbye.